A digital core banking system is essential to speed up innovation and meet the changing customer needs and promptly responding to the changing environments. Customers these days are increasingly demanding services that are personalized and efficient. They want to access the services and solutions digitally and using the devices they want and within the time frame they want. Therefore, we can say that focus should be on a front-to-end digital transformation and enabling seamless customer-centric service to deliver the right interaction at the right time and via the right channel. There is a fair chance that banks have already adapted the fancy website and the fancy app with the features such as chatbot and AI. But true digital transformation cannot happen just at the channels. Banks have started to understand that digital transformation can only happen when digitization is used throughout the bank. To become truly digital, banks should invest in a digital core banking universe, which is based on certain principles such as whole of the core, componentized architecture, microservices, open banking, and the cloud readiness. So let's talk more about each of these in the detail, starting with whole of the core. The primary purpose behind whole of the core is to have core banking platforms solely acting as a system of records and for posting the ledgers. New capabilities or any customizations which happens should be built outside the core. So mantra for the core is literally zero customizations, ensuring the standard offering of the product to the business. The next principle I would say would be the componentized architecture. A digital core banking system is structured as a modular and a componentized platform of retail and corporate. A componentized architecture, it provides flexibility for the bank to decide what to deploy, when to deploy, or upgrade a component. The next gen banking solutions offers discrete and smaller components which independently extend the digital processing capabilities of the banking ecosystem while continuing to maintain the basic core banking product. Let's take about another example of for the microservices. The banking software industry has reached another milestone with the rollout of functionally rich microservices based architecture. Unlike legacy monolithic core banking systems, microservices are independently deployable APIs which are cloud native and cloud agnostic with the tangible benefits. Microservices strategy offers the benefit of independent component upgrades with minimum impact to the BAU. It helps you to build extensive set of standalone microservices for the payments, dedupe, fraud management, accounting and deposits, lending, product catalog, pricing, and analytics. Let's take another example on the cloud readiness. The cloud-ready core banking platforms are relatively new, but are set to become mainstream in the coming years. A cloud platform is the solution to numerous core banking challenges such as high IT infrastructure cost, frequent hardware upgrades, around-the-clock availability, security, scalability. So, however, the banking industry still shows much of a reluctance to adopt to the cloud due to apprehensions over the data leaks. However, on the contrary, these cloud-based platforms are more secure on the on-premise solutions. Taking example of the open banking API, open APIs serve as a bridge between the core banking components to connect banks to the fintech world, or I would say the fintech ecosystem, through processing and assisting the banks in reducing their dependence on the legacy system. The banks initially were ignoring the fintech competition for quite some time, hoping it would go away. However, thanks to the open banking framework and standards, a huge amount of transactions in the future will flow through channels owned not by the banks but by fintech and the third-party firms in the new enterprise ecosystem.